After a short break, Nastasia Arinsa will have your markets news.
What do you do for a living?
I'm an attorney.
And what is Marguerite's law of saving?
To call outsurance, that definitely is it. We think all insurance companies are the same. I didn't know that I was overpaying for my insurance up until I phoned outsurance. I'm saving 14,800 Rand a year. I'm feeling empowered, actually, because now I know I am with the best insurance company.
SMS SAVE to 44211 or call 08600 60,000 to switch and save today.
The Northern Cape, its people, as diverse as its landscape. We bring you these stories.
We
amplify the voices of all cultures, and it's your stories we don't take for granted.
We traverse South Africa's largest province regularly, bring you news of its political landscape, its adverse weather, and how the largely poor and mostly rural people survive.
Now, we not only bring you news of their latest discoveries and how and why they work, but we also put it in a language so that you can understand why it matters to you.
We bring you stories of substance and detail.
The voices of the people are what matter to us. Their plight is our concern.
We sit in meetings dissecting stories. You can trust us as your source of news.
I'm Tapelo Khobuswane, and I bring you material of high quality.
Camera work is our pride in driving great video content, and it must be flawless.
Trust us to bring you information on what matters to you.
Good afternoon. Shares in Asia mostly tumbled as the ongoing Russia-Ukraine conflict continued to lead to a surge in oil prices. The Nikkei in Japan dropping about 1.6%. Hong Kong's Hang Seng Index shedding 1.8% as of its final hour of trading. Then we have the mainland Chinese stocks that will also finish the day in negative territory. What we want to do now is put some charts on screen for you just to see, for you to see what has been happening, especially from a commodities front. We're going to start off with that Brent crude chart, giving you an indication of what has been happening with the oil price. And of course, this is on supply disruption fears. And of course, adding to that is the hefty sanctions that have been imposed on Russian banks. At some point, we did see the oil price reaching as high as $113 a barrel. It's eased off somewhat to about $111 a barrel. Against this backdrop, we have the OPEC Plus meeting, and they're expected to stick to plans to add about 400,000 of barrels per day of supply each month. Another interesting chart is the gold chart. We did see the dollar index rising to a fresh 20-month high, and as a result of that, gold has eased somewhat, $1,942 a fine ounce. Palladium, interestingly, up 3%. You may remember Russia is the producer of about 40% of palladium production. Another interesting one that I'm having fun playing around with is the asset class chart. This one is where I benchmark Brent, the price of Brent crude, euro, gold, and Bitcoin to see over a 3-month period how that has performed, and you can see that sharp spike there, in particularly for Brent and gold, where we see those different colors, the orange and the purple. That's the key line that I'm focusing on. Another one that is also fascinating to look at is what has been happening with coal prices. We did see Asian imports of coal slumping in February, and again, this is as prices remain elevated. So those are the different grades of coal prices that I am looking at, thermal and coking grades, and particularly, again, the orange and I suppose we can call that a bit of a red color that I am looking at. It's quite interesting to see the dynamics, at least over the past 3-month period, as we have seen those Russia tensions. To talk to us about the market perspective, We are joined by Carmen Mpelwane, who is a portfolio manager at ABSA Asset Management. Carmen, thank you so much for your time. Let's check in on the JSE so far. I mean, how's that reacting to a whole host of events that are playing out globally?
Yes, so today we've seen the market start up strongly. JSE is up 52 bips so far, and that's largely due to the fact that we're quite resource heavy on the stock exchange. And so we see the resources index up almost 2%, whereas the rest of the sectors are giving back sort of the recovery that they did yesterday.
So on SENS, even though we have like all of this stuff taking our attention, Russia-Ukraine tensions, we still have companies that are publishing their financials, particularly from a local point of view. We saw Cashbuild and Woolworths. Which of those two companies caught your interest?
I think Woolworths definitely would be the one that catches the most interest for today. And that's largely driven by the fact that as much as it was well guided in terms of the headline earnings per share down 16%, when you delve down into the different sectors, you'll see that food has pulled back marginally, especially when you compare to the likes of ShopRite, which continues to grow market share. And we saw their results out a few weeks ago. Woolies Food does add approximately, almost 50% of earnings for the Woolworths Group. And so therefore very concerning around how they endeavor to move forward in terms of their growth. However, having said that, the fashion, beauty and home division has seen an uptick, which we have been waiting for quite a few periods. And that's largely driven by an improvement in terms of space rationalization and a reduction in their discounting amounts as well. Australia, albeit the fact that it has pulled back, and that largely due to the lockdown in the area, it has come in ahead of consensus. And I think the key thing for Woolies was the resumption of the interim dividend, as well as a 1 billion dividend from David Jones back into South Africa, which will be used for debt reduction for the Woolworths Group.
Let's take things globally for a bit. I mean, given what is happening with the Russia-Ukraine tensions, you just look at commodity prices and you look at what is happening when it comes to especially inflation. Is the market pricing in the prospect of slower growth alongside higher inflation?
Yeah, so the recent war has definitely put a spanner in the works. If you had asked me this question 2 weeks ago, you'd see that we'd already priced in a 50 pip hike coming in March. However, now it's a little bit more murky to decipher what the Fed will do going forward. We've already seen the IEA come out with an announcement in terms of trying to rein in the oil price and alleviate fears around all supplies, just to give the economy some type of boost. But that hasn't had the impact that they had expected. And we saw Brent crude breaching the $112 a barrel today. So I'm saying all of that because what it does allow is that the US is going to have a harder time reining in inflation, specifically on energy price increases. And then we still have supply chain constraints that will continue. So it's going to be a tough decision. We initially had thought that we'd get about seven hikes from the Fed for this year, but it's unlikely to be reached at this point under the current circumstances, and largely looking for probably 3 to 4 hikes for the rest of the year.
On that note then, I mean, as we get into the week, there's probably a lot that you focus on a daily basis. What events are you keeping an eye on?
So at the forefront of everyone's mind is what Putin's going to do next. We've seen an escalation overnight, and hence the markets globally have pulled back, and you saw the risk off. So adding to that is definitely looking at the Brent crude price. As I mentioned, already at 7-year highs. So to see which way that goes. And similarly, in terms of the demand for gold as a safe haven, we've seen a significant uptick as well. So that will be the key for this week. And then, as you mentioned, the OPEC Plus is meeting today, and we'll see what they come out with, as well as the Fed chair addressing Congress later today, and we'll get a sense of his rhetoric and his sentiment.
Given the environment that we're in, I mean, how cautious are you as a portfolio manager?
Yeah, it's terribly difficult, specifically in the JSE, I think. But as I've said, because we are resources heavy, and we've seen commodity prices hold up quite a bit. It's definitely a key point to have already moved into an overweight resources position. But having said that, there's not as much transparency as we would like. So there would still be an opportunity to find value in other sectors, albeit very cautiously. If this war does carry on for longer than we expect, it could have lasting repercussions that we haven't priced in yet into our valuations. But having said that, we know we have to remain diversified in our portfolio, so we can't stay away from other sectors.
Speaking of those sectors, I mean, are there sectors that you believe will continue to rally no matter what happens, whether it's the geopolitical tensions or it's the Fed moving more aggressively, etc.?
So in a risk-off environment, as we've seen, SASL has been one of the key beneficiaries for this. And that's largely driven by an increase in the heightened oil price. So as long as we remain of the view that the oil reserves will be under pressure, and we've seen that coming through in the last 3 or 4 months, then we're likely to see SASL being supported in terms of that. Again, also commodity prices appear to be elevated, but if the current situation remains, and specifically sanctions continue to be ramped up against Russia, that's one of the key points to look at. I think as well, in terms of wheat prices and food prices, we shouldn't underestimate the impact that we get from the war in relation to the export markets from both Ukraine and Russia. So we already see wheat at elevated prices. So that definitely is a read-through for on the food sector side as well, and how food producers are able to either pass that through or not at this stage.
All right, Carmen, always a pleasure having a conversation with you. That is Carmen Mpelwana, who is a portfolio manager at Absa Asset Management. We'll have more business news with Nompumelelo after the break, and then we'll also have books on point a little bit later, so stay tuned.